Welcome to the weekly market wrap-up. I'm Hannah Bernard. March Madness swept the markets this week, and no, we're not talking about college basketball. In typical March fashion, wild swings in the market delivered a punishing blow on Tuesday, wiping all gains for the year, only to swing back on Thursday and retake the lost ground. What's driving this year's madness? Let's find out. It appears good news is once again bad news for the markets, as better corporate earnings, stellar job growth, and a surging US dollar have fanned the fears of interest rate hikes sooner rather than later. The Dow Jones Industrial Average felt the brunt of it this week, getting hammered 332 points on Tuesday, losing 1.9% in value. The drop erased all its gains for the year, but on Thursday it bounced back into positive territory with a 260-point jump to hit 17,895 at the close. The S&P 500 also clawed its way back into positive territory on Thursday after Tuesday's fall. The blue chip index popped nearly 26 points or 1.26% in value to close at 2,065. And finally, the Nasdaq, which has been the most stable of the major indices, climbed 43 points on Thursday to close at 4,893. Now let's turn to Canadian markets, which delivered some March mania of its own. The Toronto Stock Exchange collapsed 212 points on Tuesday, shedding 1.4% in value. It did, however, manage to regain some of the loss Wednesday and again on Thursday with a 31-point bump to close at 14,770. The TSX Venture Exchange notched a 4.14 win on Thursday, closing at 673.77, but the bump could hardly mask the pain as the index lost more than 25 points on the week, or 3.72% in overall value. Intel took a hit on Thursday after the firm lowered its first quarter revenue outlook, reversing its guidance offered less than 2 months ago. The move harkens a return to the bad old days when the chip maker would abruptly lower guidance mid-quarter. From 2006 to 2012, Intel warned and cut its sales or profit guidance 7 times, leading many investors to grow weary of the stock. Intel shares dropped 4.73% on Thursday, leaving it with a 14% loss so far in 2015. That's a complete reversal from last year, when Intel had the second best total return amongst all large tech stocks with a 47% gain. Big news yesterday from Canada's broadcast regulator. The CRTC is rewriting the rules that protect Canadian television programs in the hopes that changes would nurture more popular homegrown shows. The new rules will relax quotas that require broadcasters to fill a certain number of hours each day with Canadian-made content. The changes are also encouraging bigger budget shows, favoring live-action dramas and comedies with budgets of at least $2 million per hour-long episode. The Canadian TV system currently employs nearly 60,000 people, and some $4.1 billion is poured into creating Canadian-made content each year. And now to winners and losers in our picks for the week. The winner for this week is Barnes & Noble Inc., ticker symbol BKS. The tale of the tape shows a turnaround for the perennial bookseller this week. Shares in Barnes & Noble tumbled 10% on Tuesday after delivering a less than stellar earnings report. But investors took another look and turned the page, delivering a 6% bump in share value on Wednesday. Several factors led to the change in sentiment, including the announcement the company will close only 13 consumer stores instead of 20, as earlier forecasted. The loser for this week is Danier Leather Inc., ticker symbol DL.TO. Shares in the well-known leather retailer tumbled nearly 10% on Wednesday, continuing its fall since reporting last month that second quarter results came in sharply lower than last year. Danier reported net earnings in the second quarter were just half of those in the prior year quarter, a dramatic fall in sales. Well, those are our winners and losers for this week, and now it's time to check in on the gains that you could have locked in by following the weekly watch list from Robert James and Viral Stocks. All right, that's enough about this week. Now let's turn to Baystreet.ca's look at the week ahead and the snapshot of what analysts are forecasting for companies whose earnings reports are coming out next week. Here are 3 U.S. stocks to watch. First up on Wednesday is FedEx Corp with an EPS forecast of $1.88 compared to $1.23 in the prior year quarter. FedEx is once again amongst the world's most admired companies. In its annual ranking, Fortune magazine placed FedEx 12th overall and number 1 in the delivery industry. Next up on Thursday is Nike Inc. with an EPS forecast of 85 cents compared to 76 cents in the prior year quarter. Finally, on Friday is Darden Restaurants Inc. with an EPS forecast of 84 cents compared to 82 cents in the prior year quarter. And now here are 3 Canadian stocks to watch next week. First up on Tuesday is Transcontinental Inc. with an EPS forecast of 38 cents compared to 34 cents in the prior year quarter. Next up on Wednesday is Silver Wheaton Corp. with an EPS forecast of 14 cents compared to 27 cents in the prior year quarter. Finally, on Thursday is Alaris Royalty Corp. with an EPS forecast of 43 cents compared to 41 cents in the prior year quarter. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel or podcast on iTunes and find us on Facebook and on Twitter. For Viral Network News and Baystreet.ca, I'm Hannah Bernard.